of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, after my 6-minute break, I just did 2 hours with the Money Show, doing a little lectures on the patterns that we look at, some live trading, of course, but it worked out relatively well. I posted a chart of the E-mini that we were looking at here. We just made a bottom down here, looking for the market to get to about 48 in the S&P. Now, remember, this is just a 20-minute chart, so it's not something you want to look at the monthly. But that chart was the interesting one. But if you'll notice here, the next one I'm going to post here was the 135 pattern that we had here in the E-mini today. We'll get this up here so you'll be able to take a look at it. You'll see that there was a perfect 135 pattern. As you can see, we had a beautiful ratio right here. This was 61% of that high. This one was 61% of that high. It's still not up? No chart, Al? Okay. Then you see you went down and made our objective right here, and then we're looking to sell it right up in here with an objective down in here. This is what we were doing, trying to show them this is nothing more than that 135 pattern that we look at all the time, and it turned out to be pretty good. So anyway, that's what we were looking today. We're also watching a couple other patterns that was very, very interesting. And let's just move. And I should tell you about these because I sent these out in a video long before they happened, but let me see how I can get this thing up here to see if I get it right or not. There we go. Hold on a second. Here's the other one is the old crude oil. Let me see where we are here right now. Crude oil. Yes, this is a very interesting one here. To hold on, and you'll be able to see it right here. Hold on. Give me a second here, folks. I'm just scrambling because I've got to get this ready for you folks, and it's not as easy as you might think. Get this up here and take a quick look at it. Got to be 74 degrees here in the old Pueblo today, folks. Very nice from our lows at 23 we had last week. You'll notice the big ABCD here on this. You see the ABCD to the downside. Now, you notice the difference between the actual price and this. The reason why it's you got to draw it down straight because it misses that high. That brings it down. There was your actual bottom right there. There's your ABCD to the upside, and you pull back already. You see you had multiple numbers coming in there. There was your first profit objective from that AB equals CD pattern, and now you're approaching again. This is major up here, folks. If we can get this thing to close above that level, it's going to be quite interesting. And the reason why, you notice this pullback here wasn't even quite a 382. It was not, but it was a perfect retracement of this one right here. Just when I was doing the Money Show, I mean, I was actually on it and said your sell here was at 49, 48 or 49. The high was 49. It came down here, dropped $1.50, and there it did exactly what that did, which is right out of Andrew Lowe's book. By the way, the non-random walk down Wall Street. By the way, our guest today will be Jeff Huge of Alpha Insights. He'll be coming on at the break to try to salvage me. I actually really enjoy that stuff, folks. I don't know what it is. I must be you know what else I didn't do? I didn't even turn on hold on a second. It didn't turn on I did turn on the, I am there. I didn't realize I turned on the video. It was already on. So we'll take a quick look here at that. There's the same pattern here that we're watching here is what we were paying attention to today, but I was going over those things. Folks, we have not validated the uptrend line yet in the market moves that we had yesterday. The highs that we made in the Dow Jones was right at the 78.6 level. The Dow made a tiny bit higher. NASDAQ couldn't even come close. We're going to cover the NASDAQ just shortly here. As a matter of fact, let me do that right now because I want to be able to verify what I think is happening with what people are talking about on the tube here. And they're mostly worried about the Chinese balloons and stuff like that. And the rumors that go on and that stuff is just totally ridiculous. I mean, these guys they should be ashamed of themselves for what they report. Anyway, let's move up here. You'll see here where we were in the old NASDAQ over the last few days. Okay, you know what I'm going to do? I'm going to do it the easy way. I'm just going to put the ratios in and let them fall where they may, and you'll be able to see them easy enough. They're a little bit different than what I use because they're off by a point or two from the numbers that we look at, but for trading purposes, it really doesn't make any difference. You can see here we're still in a downtrend from where we were here in the NASDAQ, and we had the break today all the way down. Again, you got a 135 pattern here, folks, in the NASDAQ. This could be a pretty good bottom because you've got a potential. This one's Fed bottom, so it changes it a bit, but I would still count it because this is just the motionalism of the Fed. You've got a potential 135 pattern right here. Going below this, if we only make a 382, sayonara. That is going to be really negative, boys and girls, if we do that. That's not going to be very good at all. So that's pretty much what we're looking at here. If you want to listen to the Money Show thing, just go to the Money Show. What do they call it? Money Show video presentation or something like that, and you can get it online if you like. If you haven't seen my presentations on the 135 and the Floor Trader's Handbook and why it's so important for mathematical purposes, then you probably should see that video. Or sign up to the next time we do a live one because it tells you where these numbers come from and stuff. But watch for a 382 retracement here, folks, on this NASDAQ because you got lower tops still, you see. You still have a little higher bottom in here, but you still got major lower tops. So NASDAQ's got to get moving in order to be any good. Right now, it's just barely making a 382. So that's what we're paying attention to here this morning. Had a question about the stocks of Amazon and stuff like that the price of Amazon has come down quite a bit from what we were looking at before. If you give me a second here, you'll be able to see that it completed everything that it was supposed to be doing in that first part of that bull market. We'll get this down here. I don't know why I'm having a trouble with, what, I think it's the video stuff, but let me move this over just a minute. Here you'll be able to see it here. There we are, almost there. Okay, here we're ready here. Get this up here so we can see it. And get it up here, and there we are. Hope to do a live show here pretty soon here this month, maybe on the 23rd. And then I'm thinking of doing a 2 or 3 day trading. Not going to be going to do some teaching, but it's going to be mainly trading. 2 or 3 live days. I don't know where I'm going to do it yet, but I like this, and I'm good at it. Do I make money every day? Heck no. Do I lose a lot? Once in a while, but not big. Anyway, let's take a break. 877-927-6648. Billy Ray Valentine.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN. Educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted some charts during that program because for Money Show, because a lot of those folks had never heard of me, and didn't know anything about it. But the ones that were there were interested in stock stuff. So I showed them the charts of Amazon, Tesla, Apple, and what was the other one? Amazon, Tesla, Apple, one other one. I can't remember the fourth one. Doesn't make any difference. Anyway, it showed the patterns completing and where they went to. You realize that Tesla, folks, almost doubled in price from the ABCD at 109. The low was 106. I mean, I didn't even realize it. Hit 206 or something today. The 50% retracement on that whole move down was at 208. So that was a big move. And look at Amazon. It topped a few days ago at a perfect ABCD equal pattern. And then what we did is we looked at the euro and we looked at the pound and some of the things that we were messing with today with the S&P with the 135 pattern. And when I look at these and I do them, day after day, I realize how lucky I was to stumble onto this stuff through the help of many people along the way. John Hill, of course, and just so many other people that were so helpful. And of course, Eddie Horowitz, who passed away last Saturday. Still can't believe he's gone. He's the one that was responsible for me to getting a job at Drexel Burnham, folks. I didn't find this out till about 8-9 years ago that, when I was talking to one of the old retired directors at Drexel saying how lucky I was, to get that job. And he says, you had a heck of a referral. And I says, what do you mean? He said, Ed Horowitz, he said, you got to hire this kid. I was a kid. I was 32, 34. And, it turned out to be the easiest of all the years I've been in this business. And I'm figuring since 62 when I was a junior in college, I have never had any better years with fun and everything than the years that I had at Drexel, 76 through 82. Those years I made over 100% a year, sometimes double that. But mainly, folks, it was biased because I was very, very bullish gold and silver. But even after silver and gold topped in 80, I still was able to do pretty good numbers, even though gold dropped. Remember, that topped in January the 20th of 1980, and it didn't bottom, folks. It didn't bottom until 21 years later in 2001. I remember that because Tom O'Brien, I had just met him, and he was bullish. Gold was around 256 or 266, something like that an ounce. And I bought the first gold coins for my grandson back in when he was born, back in 2000. In August of 2000 is when I first started buying some gold. I used to buy 1 or 2 a month for him. God, what happened to all those coins? He still has them, and I told him never sold. And I said, don't sell them. I said, never sold mine. Don't sell yours. I said, just keep them there. If you ever need money, sell one of them. I said, you'll be okay. But anyway, I was lucky. But, and in fact, I've been lucky at just about everything. God just really blessed me. Gosh, you think if I don't believe it or how much I'm thankful for it. That's why I try to give so much back to people that if I can and stuff. I have 3 students in Turkey that were bothered just a little bit about the earthquakes. They didn't have any deaths in the family. Had some little bit of damage. Something fell on one of the cars and stuff like that. But they're doing okay. But some of their friends were, over 8,000 people already died. And then, oh, my goodness, more, I don't know. I don't know if Larry Williams is going to do anything. But when they had the thing at Christchurch in New Zealand many years ago, Larry did a seminar where we donated everything, all of our time and everything. We donated, free teaching, whatever it happens to be. God, he raised a ton of money, and it was fun. And I think I got 14 people that became students over that time period from New Zealand. And, of course, we were invited there years later, but we're just lucky, boys. 7.8 earthquake, let me tell you. I've been in a couple 7.2s, but boy, 7.8. The trouble is they go exponential, and that's the real pattern that we have to worry about in here. Anyway, the old cowboy is a little bit tired, but fortunately, we are going to have our good friend Jeff Hughes is going to be on the air here, giving us some ideas of what's going on in some of these things, and that'll be good to take a look at. I did want to bring the chart of Tesla up because it has reached some major resistance level here, folks. I want to get this here so you'll be able to see it. Hold on with me 1 second, and you'll be seeing that we are really within a heartbeat of that 50% level. And I don't know if it's sold off much today or not, but it is in the crosshairs of a 50% retracement off of the high that we made back here 4 months ago. And remember, folks, this thing is almost doubled in price. You remember from 106 to 206, that's double. Hello, operator. I mean, that's a heck of an investment during that time. So all that was multiple ABCD patterns. That's all that was, just sitting there staring you right in the face. So these are some of the things that we're looking at today. So if you have any questions, and Al says that the phone lines are absolutely jammed right now, you're not able to get through, but call anyway, though you'll be on a long waiting list. Al's got it set up so that he can pull the numbers off one at a time, and right now Al says it's only about 100 and went from 147. Some people got tired of waiting, so there's the next line is you'll be 133rd in line, Al says, if you hurry. And if you don't hurry, you're probably going to miss it. Remember, we have Jeff Hughes coming up at the break. So that's the main thing that you want to keep in mind. Also, I wanted to take a second here to talk just about the euro. And during the time of the big event yesterday with the Federal Reserve, I wanted to show the folks here why foreign exchange is so much better to trade than anybody else, and I will show it to you right here. So just give me a little break and you'll be able to see it. And there's going to be, I'm going to draw the 382 line in for you so that you don't have to guess on it, and you'll be able to see that's where we went to, and spot on. And we actually hit it twice, once during the Fed time and once afterwards. The reason why this is important, folks, if you trade foreign exchange, the Federal Reserve can play lots of games with you, okay? But they can't play that game, and that market's too darn big, because you're talking $1 trillion market a day. So even the Fed can't screw with this one. And that's why you see that volatility. But that's just short-term stuff, because when the numbers are there, that's when you got to be really, really careful. They can't mess with this one. Listen, we have Jeff Huge coming up in a little bit of a break. Tomorrow, we have, as our guest, Jim Bartolioni of Bart's Charts. You don't want to miss that. And on Friday, I have somebody, and I can't remember the name of who it's going to be, but we will get him on the board for sure. Right now, I'm just putting the pieces together. So we're going to take a break here. And when we come back, we're going to have Jeff Huge of Alpha Insights. So stay with us, folks.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have Jeff Huge of Alpha Insights out of Minneapolis, Minnesota on the line today. Jeff, how are you doing?
I'm doing great, Larry. How are you?
How do you like this volatility, Bubba?
Oh, you know I love it.
Man, it is. I mean, every time I think I've seen everything, they surprise me. So, I mean, see the S&P go up 90, down 70, up 90 in one day. Oh, my God, that's like pork bellies used to trade, for heaven's sakes. But anyway, it's pretty exciting. Tell the folks what you're looking at. The first chart here is investment sentiment.
Well, you know, Larry, we like to look at investor sentiment just to get a sense of how into it traders and investors have become at this point. If we look back over the last 52 weeks, we can see that the CNN Fear and Greed Index, which is an intermediate-term gauge of investor sentiment, kind of takes like 7 different components of market action and compiles them together into a 0 to 100 scale. Well, that hit a new 52-week high just this past week, topping at like 78%, but closing Friday at 76%, which puts us squarely in the extreme greed zone for the first time in the last year. So that tells me that, it's not just the, evidence that you're seeing in the marketplace, Bitcoin screaming, all the crypto stocks and disruptive tech stocks and meme stocks are all going up at exponential rates. But this is just a mini mania, and it's showing up in investor sentiment as well.
Wow, I know. It's really, when I look at this fear and greed thing, most people don't ever show that. I mean, it's really quite amazing. This next chart is of great interest to me, and that's on the complacency of what we're seeing in the market. And I can certainly see that and attest to it by people that, I play poker quite a bit. And I mean, it's just amazing to hear what these people are talking about. Oh, my goodness. You think that we were in a 50-year bull market just starting. But anyway, go ahead, tell us what we're looking at here within the complacency of investors.
Yeah, just another kind of way to kind of gauge investor sentiment is looking at the VIX. This is the volatility index in the bottom panel of this chart. And we, basically paired it up with the S&P 500. And you can see that each time the S&P made a low, the VIX made a high above 34%. And each time the VIX or the S&P rallied to, kind of a bear market recovery high, we saw a low in the VIX come in below 20%. And, that below 20% really indicates complacency, whereas above 34% indicates anxiety. And, we've rallied just about the same percentage gain off the October low into the February highs here as we did back from June to August. It's right around just below 17% from peak to trough. And so, now we're hovering down in this kind of high teens area. Friday's close was 18.3. Yesterday it got up into the mid-19s. We have not yet closed above the 21-day moving average on the VIX. But my suspicion is, based on this relationship over the past year, is that we're very close to seeing a reversal here. And I think once the VIX closes above its 21-day moving average, that will signal a reversal in volatility and a reversal in stock prices, if history is any indication.
This next chart explains that volatility to the naked eye. You can see that this certainly is at a level where it could easily spike, and it certainly, with the action that we saw yesterday, my goodness, I mean, to see it go down 70, up 90, up 80. I mean, it's talking thousands of dollars. Fortunately, I was to buy. I bought every low, and I sold every high all the way up, and so I did pretty good.
I'm glad to hear that.
Jeff, you mean you don't believe
this chart, Larry, speaks to what's happening within the volatility index itself. There's another gauge known as the volatility of volatility index, the VVIX. And so what we've done is we've paired the VIX on top with the VVIX on the bottom. And you can see that there are very discernible divergences that develop when the VIX hits a high.
Wow, I never seen that. So it's,
if the VVIX
explain to me what that is again, please.
High, sure. The VVIX is just the volatility of the VIX itself. And so, when you see these extremes, whether it's a high or a low, and if they're unconfirmed by the VVIX, then it typically leads to a reversal. And that's exactly what we're seeing right now. We made a low on February 1st in the VIX. However, the VVIX actually made its low on January 6th. And since that time has made consecutive higher lows. That positive divergence suggests that the VIX is ready to turn. And it's usually within days to weeks from the time that relationship shows up. My suspicion is that within the next few days, we're going to see a move above the 21-day moving average. That will be the confirming evidence that this is that this whole scenario is operative. And my view is this. I think we're going to see a bigger extreme this time. We haven't printed above 40% on the VIX in over 2 years. I would not be surprised to see the VIX rally all the way to 40% as stock prices tumble in the coming weeks.
That will be a big shock to a whole lot of people. Now, the next one is always interesting because it's the Elliott wave and also the variations within it. So what are you looking at? You have two possible scenarios?
Yeah, there's a preferred count, and I attach about a 60% probability that the preferred count's operative, and that suggests that the market peaked in January of 2022 at 4 degrees of trend. Super cycle, primary degree, and intermediate degree, and everything below that, right? But this is all we're documenting. And since that time, we've fallen in 5 waves that we count at intermediate degree, which comes to an amalgamation of wave 1 down at primary degree. And the rally that we saw off that June 17th low last year was primary degree wave 2. That was the August high. And since that point, we've fallen again in 5 waves, which I count as intermediate wave 1 down, and we've rallied in 3 waves, and we stopped dead at the 100-week moving average, which is a key level. A lot of people look at the 20-month moving average. As long as that level holds, my suspicion is that we're probably done. I do allow for just a little bit more. There's a gap. We'll talk about that in a second that could be filled. But at the end of the day, we're very, very close, if we haven't already topped off, an intermediate degree, which means the setup here is for a third of a third wave decline, which could carry down into the mid-2000s. Now, the alternate count suggests that wave 1 decline in June might actually be wave A rather than wave 1. And if that's the case, then we could get a bigger counter trend rally, which would be a flat. This is a big A, B, C, and the A wave was the August high. The B wave was the October low, and we're in the midst of a C wave that could carry above that August high somewhat and as high as possibly 45, 64. I would ascribe maybe a 30% probability to this. I'm not ready to even talk about it until we get above the August 16th high, which is S&P 4325. So we'd have to break out above that level just to make this count part of the discussion. At this point, it's just a hypothetical. If we're wrong about the preferred count, then this is probably what's in play.
What's the question from the Dan here? What is the downside number that you really feel comfortable when it really starts to break? What's that breakout number to the downside?
I think 2750 at the minimum.
Okay. All right. Hey, we'll be right back with Jeff Hughes, Alpha Insights, folks. If you have any questions, 877-927-6648.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks, speaking with Jeff Hughes of Alpha Insights, and you've posted that chart here for your Elliott wave model here, and you've got a beautiful trend line drawn there that's got 3 valid points. So to me, that's really important. If we break that line, how long do you think it would take to break that line? I mean, I know it's pretty tough to give an exact time, but could it take 2 or 3 weeks, or could it happen even sooner?
I think we'll break that line on or before February 15th for a lot of reasons. Okay. But that's since you asked. But let me just explain the chart. This is a 4-hour intraday range chart, really just detailing the S&P 500 since the August 16th high. So you can see that 5-wave decline into the October low. We're counting that as intermediate wave 1, as I mentioned before. And you can see why we're counting this as a correction. This is a clear 3-wave advance. Each wave is 3 waves as well. And each one of those, the A and the C wave of wave W, you can see that's an impulse wave. It's 5 waves up, it stops, it corrects, 5 waves up, it stops, and then it corrects aggressively and overlaps. And so that's why we know that this isn't a full impulse pattern to the upside. We don't have 5 waves up. We've got a W, an X, and a Y. We think the Y probably topped on February 2nd. There is an argument to be made that we could, possibly squeak a little bit higher, another % or 2 to around 42.30. That's the Fibonacci 88.6%. A lot of people are like, wait, that's not a Fibonacci number. It's actually the square root of 78.6. And it actually comes right into play with an unfilled chart gap at S&P 4228. And so that's really what concerns us. But a break below that horizontal line at around 4,080 or so, that would be yesterday's low. If we take out that level, then I think there's a high probability that the market could fall aggressively. And we've got a big piece of news coming out on Valentine's Day. It's called the CPI report. And we just got a hot jobs number last Friday. And I think if we get a hot CPI number, that'll be 2 data points in a row that suggest that the inflation story isn't under wraps and that the Fed could be tightening longer and holding rates higher for longer, as they've said. And I think it puts the whole pivot story to rest. And if, in fact, that happens, I think we'll see 10-year bond yields move up aggressively back to around almost 4% or more. And I think the stock market could fall aggressively on that news. It changes the narrative, and that's why I say, February 15th or sooner as being the point where I think the breakdown could occur.
Yeah, Jeff, this next chart I just posted here, I hope you can It's your tradable things you talked about 2 weeks ago on that stock that you recommended as a say. This is really shows the value of technical analysis. Tell the folks what you're watching for here.
Sure. This is a great stock for a long time. Clearfield, they're a telecom communications company. They make equipment. The stock was in a tremendous uptrend since mid-2020, just up until the first of this year. And what happened at that time is that the stock broke below a structural support level at around $89, and in so doing took out the trend line that's been in place since 2020. And so, that was double significant. And I think from the standpoint of that breakdown, we could count a double top in the security itself, and that would get us down to around $31 if it resolved properly. We're at about 64 today, rallying off the lows. We recommended this as a short idea a couple weeks ago, as you point out. It's worked out pretty well so far. I think we're getting a second chance to sell short here. I would move my stop loss down to around $80, and and I would sell short here, looking for a move down to 31 in the weeks and months ahead. We've got a longer-term time horizon than probably you normally talk about. We think about things as 1 to 3 month swing trade opportunities. I think that this is going to be toward the longer end of that. I think we got 3 months to watch this thing go down. And so it's a durable downtrend at this point.
Well, it certainly looks like it, that's for sure. Okay, the next one we're going to take a look at here, just give me a second, and that's we're going to talk about your free monthly newsletter. Jeff, you do a great job, but frankly, the question I have, your free monthly newsletter is just to get interest in what you're doing and show folks just a few things to prove to them that this really has value. I mean, usually when you give something for free, that's what they value it at. So you do such a great job. I don't know why you give it away.
Well, Larry, let me tell you, I'm here to save as many as I can. And, some people don't know the medicine they need until you give it to them. So I'm giving everybody an opportunity to see what we're made of. I get a lot of questions. Why is all this going to happen? We lay out the answers to those questions pretty clearly in the newsletter once a month. This newsletter is free to subscribe to, and you get really down to the economic sector. We answer all the tough questions. Our forecast requires an upgrade to paid. So in order to get our regular forecast and to get our ideas, we send out a weekly top tradable idea every Wednesday. It's called the Idea Generator Lab publication. It's an institutional publication. It's actually going to go out later today, I think around 2 o'clock. We scheduled the publication. So if you sign up for a paid subscription to the newsletter today, you'll get that idea. And then, also we've been doing some other special stuff like special reports that we're sending out and special video content, which we've recently sent out, which are basically keynote addresses and interviews that we've done that you're not going to find on TV, or they're not easily found, put it that way. And so we're giving them to our paid subscribers as kind of an added value. But the bottom line to your question is we think there's a ton of value in this. The paid subscription is actually just $10 a month if you buy the annual version. It's essentially less than a cup of coffee a week to get, our cutting edge ideas and thoughts.
Oh, this is great. Listen, we're going to have you on again soon, and just be really patient, Jeff, because July 4th and 5th, your 2 days of summer, will be coming pretty soon, and maybe the ice will melt by then.
I got my fingers crossed.
I've been telling that joke to Rich Anderson for 53 years. He still doesn't like it. He's been out to visit me so many times in Arizona and California that I just can't even count him. But I've been to his house.
I think he's in Hilton Head right now. So
yeah,
he's vacated the cold for the next month.
Yeah, I know. Hey, listen, thank you, my friend, for being on. We'll have you on again soon. It's just really a pleasure talking to you. I love your charts. And even, when you're wrong, you haven't been wrong very much, but even when you're wrong, you bring it to your attention right away, which keeps the risk down really small. And that's the whole secret to this. So please be safe, and we'll have you on again in a couple of weeks, okay?
Thanks, Larry. You too. Take care now.
You bet. Thank you very much.
Bye-bye.
Jeff Huge, folks, of Alpha Insights. If you have any questions, you can call them in. on the next segment here. We've only got a couple more minutes to go. So we'll finish up here with the stock market, and I'll be back with you in just a few minutes.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, we're back, and I posted a chart of natural gas here, folks. This is a 20-minute chart, so we can see the last four or 5 days. You'll notice yesterday we had a potential for a really nice 3-drive pattern in here. Excuse me, a 1-3-5 pattern with the 61% retracement as the low of yesterday. It went up and made the ABCD pattern. Then you can see it had the break, and look what happened. It rallies up exactly to a 382 retracement and then drops. I mean, this is valuable information, folks. Is when a market can't rally past a 382 after a big trend change up, and then we're talking 20 minutes is a big trend change because you see higher bottoms, higher tops, but then that all changed today when it couldn't hit that 38. Well, it hits the 382 exactly, and then look what happens when it breaks. It breaks and goes all the way down to the 1.618 expansion, which is the ABCD on the move on the way down. So it's very, very important. By the way, folks, if you have a chance to help anybody in Turkey. If you have friends there, try to help them because, boy, 8,000 people, that's just the beginning. It's probably going to be 15 or 20 by the time they get done counting. But it's really quite sad. So try to help them out if you can. It's a very tough area there right now, as it always is, or in earthquakes and all Katrina and all the other stuff. So you're just blessed that if you don't get involved with that stuff, you're just been, because your day might be there. You just never know. My grandpa used to say, there, but for the grace of God go I. And that's got to remember, you don't want to scream about living in somebody else's shoes until you've lived there. So pretty tough over there. You want to be able to help them out as best you can. By the way, our guest tomorrow will be Jim Bartolioni of Bart's Charts. He's got some good stuff for us. She'll be coming on for sure, and that'll be fun to have him on. So let's live every day in an attitude of gratitude, and may God bless.